Morning everyone, and welcome to this Carbon Trust webinar on analysing energy bills. Just to mention first of all that this webinar does form part of a series of Green Business Fund webinars, all of which can be found on our website and do cover a range of different topics and technologies. So this webinar follows on from one we did a couple of weeks ago on understanding energy bills. As Amanda's mentioned, you should be able to see a question box on your screen. So please do feel free to type in any questions as we go along, and we will attempt to answer as many of those as we can at the end of the presentation, which should only take, estimate, about 30 minutes this morning. So just to briefly introduce myself, my name's Graham Hunter and I work in the business services team here at the Carbon Trust. And as a member of the technical delivery team, what I do is support clients normally to look at reducing on-site energy use. And one of the first things that I would normally do with clients is actually just to sit down and to have a look at the energy consumption data that is available and do some analysis on that, with the aim of being able to identify any low or zero cost measures that could be implemented before the business maybe starts looking at capital investment projects. So that's what we'll focus on during this morning's webinar. So here's the agenda for today's session. We'll start with a brief introduction, then we'll look at the metering of energy supplied to the site. Next, we'll look at what data is likely to be available to the business depending on what meter arrangement they have in place. Following this, we'll move on to explain the key methods of estimating the expected consumption at the site. Then we'll introduce the concepts of benchmarking and defining energy performance indicators and how these can be used to report exceptions. And finally, we'll summarize what we presented and then move on to explain the different services that are available through the Green Business Fund. And as I say, hopefully we'll have some time for questions at the end as well. So first of all, just to give an introduction for anyone who is maybe not so familiar with the work of the Carbon Trust, we are a not-for-profit organisation with a mission to accelerate the move to a sustainable low-carbon economy. We're experts on carbon reduction and resource efficiency, and any surpluses from group commercial activities are invested back into the mission. So we've been around since 2001. And we are very much an international organisation now, so as well as we have a head office in London and then regional offices in Cardiff, Edinburgh and Belfast. And additionally, we also have some international offices in China, Brazil, South Africa, Mexico and the United States. And as you can see on the slide here, there are essentially three elements to the work that we do. So everything would generally fall under either advice, footprinting or technology. So advice being where we advise businesses, governments and public sector clients on their opportunities in a low carbon world. We also measure and certify the environmental footprint of organizations, products and services. And finally, we help to develop and deploy low carbon technologies and solutions. So Green Business Funds, which this webinar is being delivered through, would fall under the advice element of the work that we do. So let's begin by taking a look at metering. And those who attended the last webinar will recognize this slide. So we have recycled it from the Energy Bills webinar, but it is a good place to start from again. So as previously discussed, the majority of businesses in the UK are required to have fiscal meters for gas and electricity to measure the amount of energy that's being supplied to the site. From a supplier's point of view, though, a fiscal meter's primary function is essentially just to collect that information for the purposes of billing. Electricity is measured by the number of kilowatt hours passing through the meter, while gas tends to be measured by volume, so either in cubic meters or cubic feet, which will then be converted into kilowatt hours for the purposes of billing. At its most basic, good metering will provide the information needed to check the accuracy of the invoices. However, it is unfortunately not uncommon to see businesses paying too much for the utilities through estimated bills or just basic errors in accounting. So knowing and understanding the consumption enables businesses to predict and account for their expenditure more accurately. And as a first step to understanding what you're paying for, you will need to understand what the metering arrangement is at site. So for example, do you just have basic fiscal and mains meters, or do you have potentially more advanced metering in place, like half-hourly automatic meter readings, or even sub-metering at site? So those are things that we'll move on to have a look at now. So firstly, what we tend to find when engaging with a lot of SMEs or low energy users is that monthly or quarterly invoices tend to be the only source of information that is available to us. These monthly and quarterly invoices can be a rich source of information if they are based on accurate meter readings. However, what we unfortunately find too often is that these are just based on estimated figures. So either using previous year's figures, depending on how long you've been with your current supplier, or profile class to estimate the monthly or quarterly consumption. So essentially, at best, these will take no account of any upgrades to the site that may have been implemented, so any energy efficiency improvements, or even any changes in the work patterns. So if shifts have been adjusted at sites or anything like that within the last 12 months, then estimated meter readings won't take account of this. And at worst, they won't actually be based on consumption at the site at all. As we've mentioned in the slide there, they will just be estimated based on the profile class of that site. Sites that have automatic meter readings, normally referred to as AMR, often have access to half-hourly consumption data, normally via the electricity supplier or the data collection company. And this data is usually available via a customer platform, so provides a detailed view of the energy consumption at the site, which can then potentially be used to analyze the energy consumption. So to identify any anomalies in that consumption, any spikes that you might see which are unexpected, or even to have a look at what the overnight base loads would be at the site. Analysis and consumption data like this is typically referred to as monitoring and targeting, and we typically see savings of around 5 to 10% where organizations switch to more advanced metering like AMR. There are also a couple of other increasingly common metering options just to mention. So the first one of those being smart meters. And smart meters can provide reliable and timely consumption data that is readily usable in an energy management program. So unlike AMR, which provides one-way communication to the supplier, smart meters are actually able to provide two-way communication between the energy suppliers and the meter. And while there's no universal definition for smart metering, this type of system will generally include some, if not most, of the following features. So recording of half-hourly consumption, real-time information on energy consumption that's available either immediately or via some sort of download to either or both the energy supplier and the customer. As mentioned, two-way communication between the energy supplier and the meter to facilitate services such as tariff switching. An internal memory to store consumption information and patterns, which can be a very, very useful tool. Easy to understand prominent display unit, which would have things like the cost that you're currently paying in pounds or pence per kilowatt hour consumption. An indicator at any given time of whether the consumption is low, medium, or high. A comparison of current consumption with historic or average consumption patterns, and compatibility with PC or mobile phone software as well. Smart meters may also have export metering for microgeneration. So if you had any renewable energy systems installed at sites. And finally, they should also give an illustration of demand-side management options. So for example, if you have tariffs which charge higher prices for peak demand, but lower than average prices for off-peak usage, then they would encourage consumers not to use excessive energy during these peak periods. Finally, some larger or mixed-use sites may have sub-metering installed to separate out consumption across different areas or processes. So installing sub-metering to measure selected areas of energy use could potentially give a better understanding of where energy is used and where there also might be scope to make savings. If you are considering a sub-metering strategy, then normally we would suggest breaking down the site into end uses of energy. So this might be by area, for example, by floor, zone, or even buildings or tenancies, or by system. So you might want to look at sub-metering heating and cooling systems, lighting, or even industrial processes. And sub-metering of specific areas can provide more accurate energy billing, as mentioned, to tenants as well. If you have a site where you sublet to various tenants. A sub-metering strategy should also identify the individuals who are responsible for the energy consumption in those specific areas and ensure that they have the ability to monitor the consumption that falls under their management. Additionally, it might also be worth separating out large industrial machines or plant if you wanted to be able to drill down into the energy consumption of those specific systems and processes. And the table at the bottom of the slide here just gives some examples of typical plant that might commonly justify sub-metering. So now that we've looked at the common types of metering and billing arrangements, what we'll do is to move on and have a look at monitoring and targeting of energy consumption. And the first step in establishing a monitoring and targeting system is normally to have good estimates of expected consumption for comparison with what's actually used. So similar to estimated billing, a commonly used method of predicting energy use is what we call precedent-based targeting, where expected monthly consumption is based on data from previous years. So this may be the best method where consumption is seasonal, but unrelated to any measurable driving factors. However, this is often too simplistic, as it does assume that conditions are comparable. So, for example, weather or external temperature conditions. And the main risk here normally is that excessive consumption is repeated year on year. Activity-based targeting, however, calculates consumption by reference to the driving factors that we mentioned. So the measurable things that can cause consumption to vary. So the main ones would tend to be things like weather or production volume, or for logistics and distribution companies, this might also be mileage. And again, listed in the table here are just, so depending on the energy use, some of the common driving factors that may impact upon this. So one of the key driving factors in relation to energy consumption, as we mentioned, is the weather. In the UK, this is normally for heating, but actually increasingly so can be for cooling as well. External air temperature is usually the dominant influence, and regional and local air temperature data can be converted into what's called degree day values. So these provide an index of how cold or how hot the weather was at a given place and time. Fuel consumption for space heating will normally exhibit a straight line relationship with heating degree days, as shown on the charts on the slide here. While electricity consumption should also relate to the cooling degree days if chilling plant exists on the site. So this makes it possible to identify a performance characteristic line, like the ones alluded to here, which potentially allows us to essentially just read off the expected energy consumption. The other key driving factor, as mentioned, is normally production or process energy. So where energy performance versus unit production can be represented as a straight line characteristic, so similar to energy performance versus external temperature. There are some operational advantages to this. So for example, target setting can be relatively simple, where there is a direct relationship between the production volume and the energy use of the systems, and targets of energy consumption per unit can potentially then be produced. However, life is quite often not that simple. So it is actually quite common to have several products with different energy intensities being produced at the same site. And if a straight line relationship is not applicable, then there are other methods that can be used. So for example, on the slide here in the table at the bottom, what we can see is that weekly kilowatt hour consumption has been calculated by adding up the expected consumption required to produce a volume of products A, B, and C, as well as also the fixed demand, i.e. the consumption that will occur independently of any of the production of products A, B, or C. So once actual consumption has been analysed and the expected consumption has been estimated, then normally the next step would be to carry out a benchmarking exercise and define the energy performance indicators, what we normally refer to as the EPIs, that the site would be measured against. And as shown in the bar chart here, which I've actually taken from an energy audit report, energy performance can normally be benchmarked against sector averages, or even the performance of competitor companies if that data is available. So by using consumption data and applying appropriate factors, it's possible to benchmark energy consumption, energy costs, and carbon emissions against the data available. And when looking at energy use, normally the most common metric used is kilowatt hours per meter squared. However, numerous metrics can actually be applied when analysing energy consumption and looking at the efficiency of systems on site. So for example, on the slide here, we've suggested this could be kilowatt hours per unit production. It could be kilowatt hours per full-time employee. Or if we are looking even at technology specific benchmarks, then it could be, so with lighting, for example, it could be circuit watts per square meter of lighting installed at the site. But these tend to be quite sector specific. So for example, a logistics company that we worked with recently were measuring performance in terms of carbon emissions per mile traveled. EPIs can be based on measured consumption. So, for example, we've suggested here an EPI for space heating could be 90% of the kilowatt hours per meter squared consumption from the previous year's data, or could also be set maybe to reflect industry targets as well. So depending on what sector your business is in, you may have set overarching targets. For example, for your buildings, you might have kilowatt hours per square meter targets for electricity and gas consumption. So as I said, benchmarking figures can be quite sector specific, but there are also some publicly available figures for benchmarking. So I've given the examples here of the Chartered Institute of Building Services Engineers, or even government figures as well. And just to give an example of what we mean there, so on the slide here, we can see a screen grab of some of the Sipsey figures. So these are from Sipsey Guide F, which looks at energy consumption in different types of commercial buildings. And here we can see that they actually give both best practice and typical kilowatt hours per square meter benchmark figures for both fossil fuel and gas consumption, depending on the type of site that you operate. For some common building types, so for example, offices, this guide actually goes a bit further, so it provides a breakdown of the electricity consumption benchmarks by source. So, for example, within an office building, So you have three different types of office building, and then within each of those types, they actually break down the energy using systems. So, for example, lighting, cooling, ventilation, IT systems and server rooms, even catering facilities are all given benchmark kilowatt hours per square meter figures that you could potentially compare your own consumption against to see where you stand in the wider scheme of things. So once energy consumption and energy performance indicators have been defined, the next step then would be to define a system that can be established to alert the business or even energy manager to instances of exceptional or excess consumption of energy. And the typical way to do this would be to develop an overspend league table like the one shown on the slide here. So an overspend league table is essentially a fairly simple but effective reporting format that can be used to ensure that instances of exceptional consumption are detected quickly. It can be applied in any circumstances, so by large or small energy users, and for buildings, processes, and vehicles at any chosen interval. Essentially, it's just a list of variances ranked in descending order of cost. So we can see in the example given here, we've got a number of UK sites that are operated by the one company, and the apparent overspend at those sites is ranked in order of urgency. And what we mean by the variance there is essentially the difference between the actual quantity or the actual consumption of the energy used versus the expected energy consumption that we have already defined. So routine monitoring of energy consumption by means of something like an overspend league table, as I say, is relatively simple and should potentially only take a few minutes a week once a system like this has been implemented. So in summary, effective monitoring and targeting provides the basis for good energy management. Accurate invoices do give a lot of information about the energy supply to the site and what supply costs are involved in that, and what tariff you are currently paying, and what consumption you are seeing at sites. So understanding the information given on these invoices is critical and can potentially lead to quite large cost savings, as we've said earlier on, if this information is actually accurate and is not in fact based on estimated consumption. So as a next step, it's important to analyse what metering arrangement is currently at site and what data collection and recording processes are currently in place to measure and record the data that is available from the meters. It's also worth asking the question of, is enough data available from the current metering system to be able to properly assess the energy consumption at the site, or would the site benefit from more advanced metering? So large users or multi-site organizations, for example, may benefit from installing sub-metering of different areas or different processes that are at the site. So you could look at different strategies for sub-metering and then install sub-metering based on the requirements of the site in terms of what data you actually need to see. Energy performance can, as we've shown, be benchmarked against sector averages or even performance of competitor companies, or even actually previous year's consumption at site. And then this can be assessed against the energy performance indicators that have been defined for that site. And finally, once energy performance indicators and expected consumption have been established, then a system could be established to alert the business to instances of exceptional excess consumption of energy at the site. So that brings us to the end of this section of the presentation on analysing energy bills. To finish off though, what we'll do is just give a brief overview of the other services that we offer through the Green Business Fund scheme. So the Green Business Fund is a scheme which is available to small and medium-sized businesses in England, Scotland and Wales. As you can see on the slide here, it is available to SMEs, schools, sole traders, and charities. However, is not applicable to domestic properties, public sector, or any new build projects. And to qualify for the Green Business Fund, businesses need to meet two of the three criteria outlined on the slide here, which are to not have more than 250 employees, not have an annual turnover in excess of 25.9 million, or an annual balance sheet not in excess of 12.9 million. And in addition to this, not have more than 25% of their business owned by an entity that does not meet the SME criteria. The Green Business Fund offers various services, so we'll run through these. But the first one is energy efficiency training. So this would typically be delivered through 2-hour workshops, which are hosted by our consultants across the UK. So these workshops will generally outline energy efficient behaviour and equipment to help reduce the energy consumption of a business. And the next available workshops are on the slide here. So we are running a couple of them at MX in London within the next couple of weeks. And following that, we've got one at Loughborough University and one in December in Portsmouth as well. So contact details are on the slide there as well for anyone who wants to inquire about those. Green Business Fund also offers opportunity assessments, either remotely or through site visits. So these are essentially energy audits delivered by one of our technical delivery team here at the Carbon Trust. They will highlight the top 3 costed energy saving recommendations for that site, and then also detail steps that could be taken to realise the savings that have been calculated by that consultant. So they offer a tailored appraisal approach of the energy management systems at site as well, and are generally available to SMEs, as mentioned in England, Scotland, and Wales. We also offer an implementation advice service. So this may be applicable for businesses that have either already had opportunity assessments or just already have a good idea of where the key opportunities at the site lie. So this is where, again, one of our consultants would support the business to essentially put together tender documents to be able to go out to tender to Carbon Trust accredited suppliers and ask them to come back to us with proposals and quotations for energy efficiency upgrades at the site. The consultant would then review any proposals that come back and send a tender review report to the customer, making recommendations as to which of those proposals are either most suitable or offer the best value to the business. Again, this is aimed generally at SMEs, but can actually be offered to companies with up to 1,000 employees. Through Green Business Fund, we also offer a capital contribution to SMEs who are carrying out energy efficiency upgrades. So this would typically be 15% towards the capital cost of the project, including equipment and the cost of installation. There is an upper limit of £5,000 contribution, so that is the maximum contribution that we could award to any one SME. And at the same time, there is a lower limit of £750. So at 15%, that would make the minimum project size £5,000. To qualify for that 15% funding, we would normally expect projects to have a simple payback of less than 5 years, and the project would also need to be delivered by a Carbon Trust accredited supplier who could be found on our Green Business directory via the Carbon Trust website. We also require some evidence prior to the transfer of that funding, just to ensure that the project has been installed. And again, this is available to SMEs across England, Scotland, and Wales. And the final thing to point out on the slide there is just that we are not allowed to award that contribution to any projects that have already been completed. So we can't retrospectively fund any energy efficiency projects. Again, full details of all the services mentioned here are available on the Carbon Trust website. Just a couple of additional services to mention. So we have a virtual energy manager service, which is a tailored one-on-one service where generally one of our consultants will deliver energy management modules to the business, normally via telephone calls, and these are designed to identify savings that are associated with energy management. We also offer a range of technical and non-technical webinars like the one this morning, where businesses can learn about energy efficiency and the potential opportunities available. So as I mentioned at the start, these are all available via the Carbon Trust website. And finally, we also, again via the website, have various publications available which cover a range of different technologies and topics, and provide information and guidance for businesses on how to become more energy efficient. The Green Business Fund has also more recently been developing a simple carbon footprinting calculator. So this is aimed at supporting SMEs to reduce their carbon footprint through entering some common emission sources, including electricity, gas, and fuel consumption. And this tool is also now readily available via the Carbon Trust website. And just one very final thing to flag is that the Carbon Trust also manage something called the Energy Technology List. So this is a UK government approved list of energy efficiency products. There are currently more than 15,000 products in 57 different technology categories. So for example, refrigeration, boilers, motors and drives, or heating and ventilation. A few categories where products are not listed separately. So for example, lighting, as quite simply, there are just too many lighting products available on the market to list them all. But enhanced capital allowances may still be claimed if the lighting products being installed meet the energy technology list criteria. So what we mean by that is that organizations that pay income or corporation tax can potentially claim enhanced capital allowances on purchases of ETL listed equipment, which means that they can get all the tax benefit in the year of purchase. So the example given there is that an organisation, spending £10,000 on energy technology list equipment could potentially benefit from an enhanced capital allowance of £1,900. So that brings us to the end of this morning's webinar presentation. I hope that it was useful to everyone logged on, and that everyone was able to take something from it. As mentioned at the start, we do now have some time left for questions. So what we will do is just take a few minutes to review those, and then come back on to respond to any questions that have come through. But for anyone leaving us at this stage, thank you for joining the webinar. And as I say, myself and Susan will just now have a quick look at any questions that have come through, and we'll come back to answer any of those that we can. So for now, thank you all for listening. Okay, so we've had a couple of questions come through that we can respond to just now. So the first one is just around whether or not we can share the slides. The answer to that is yes. So I understand Susan will forward on a copy of the slides to everyone who attended following the webinar this morning. So that's absolutely fine. One question here, just it's quite a good one actually on, so someone said we operate a site with both offices and warehousing facilities, each of which have very different requirements in terms of temperature, lighting levels, and general working conditions. So the question is, how would you benchmark against the Sipsey figures in this case? So what I would suggest, because Sipsey provides best practice benchmarking figures for both different types of offices and warehousing facilities, probably the simplest way to do that would be, first of all, if you can, or even if you have building plans, which would be ideal, just to measure the floor areas of both the offices and warehousing. And what that would allow you to do, if you have gas and electricity consumption data, then you could separately calculate both in terms of kilowatt hours per meter squared. So you'd have those figures for gas and electricity for both the offices and warehouses separately. If you did want to say, rather than setting energy performance indicators for the office and warehouse separately, if you want a smaller site, that might not make sense. You might just want to have an EPI for the whole site. Then what you could potentially do would just be to combine these figures, just making sure that you're obviously weighting them by the floor area covered by each one. And yeah, I mean, as long as the offices and warehouse are separately metered, then you should, as I say, be able to compare the energy consumption of both those parts of site with best practice benchmarks, and then also have a comparison of best practice for the overall site as well. If you do only have the one, say, fiscal gas and electricity meter for the whole site, then you might need to do some additional sums there, or even just have an energy audit carried out actually. That might be the quickest way to separate out the gas and electricity consumption of the two different parts of the site. If the warehousing site is maybe just quite say a simple warehousing site where the only real electrical loads, you don't have any heating and you just have lighting loads, then that's potentially quite straightforward to just separate out how much of your electricity consumption is the lighting load of the warehouse. You just might need to make some assumptions in terms of how many hours per year that lighting is actually used for. But as I say, so various different ways of looking at that. I would certainly suggest, if that is something you wanted to look at in more detail, then maybe an energy audit would be the way to go. So please do get in touch with us to see if that's something that we could organise. Just the only other question I think we have just now was actually on the opportunity assessments themselves. So someone's just asked what's, for a bit more detail on what's involved in the Green Business Fund opportunity assessments. So as I've mentioned, depending on the level of the annual energy spend at the site, one of our consultants would be assigned, and they would either come to site and carry out the energy audit that way, or they would actually carry out the audit remotely over phone and email correspondence. And what they would do in either case, to start with, would just be to work with you to have a look at the current standards of energy management at the site first of all. So run through some questions just about the different energy management systems that you have in place, and also have a look at the consumption data that you have for the site as well, which would allow us to have quite a detailed look at the systems that you currently have in place, and then look at what proportion of the annual energy costs that each of those systems is responsible for. Based on that consultant would then look to come up with some recommendations. So normally we look to come up with 3 key recommendations, and these would normally be ranked either in terms of capital cost or in terms of payback. So for each recommendation, we would point out what the capital cost of that recommendation would be, how much that would potentially save per year to the business, and then what that means in terms of how long that recommendation would take to pay for itself. So recommendations could be anything from, say, improving the standard of energy management, which is potentially a very low cost measure, which may only cost you the internal staff time that it takes to do that. Maybe some minor costs involved in installing, say, submetering, for example, as we mentioned. And then there might be some recommendations that have capital costs involved. So a very common one would be, because of the paybacks involved in upgrading traditional types of lighting with LED solutions, then that would be something that we would quite commonly look at. We'd normally be looking at only a couple of years payback on something like that. And then again, we may look at slightly longer payback measures, so things like replacing heating and cooling equipment, or even upgrading heating and cooling controls, through to things like even renewable technologies. That's something that we could look at as well. So what the consultant is essentially trying to do is to highlight in descending order what the most cost-effective recommendations would be for that site, and then essentially present those to you in quite an easy to read report, which runs through each of the recommendations and then actually details what the next steps would be if you did want to take on those recommendations and implement some energy efficiency upgrades. Also, just to point out, what some businesses have done is actually to have the opportunity assessment look at the consultant recommendations and then come back to us and say, so I want to go ahead with one or a number of these, and then what we can do is actually that company could then move on to the implementation advice service, where we can potentially support them in going out to tender for those projects or recommendations that the consultant has made. So I think those are the only questions, as I say, that we've had come through just now, and we are almost up in terms of time. So I will leave it there for now, but just end by saying that if anyone does have any follow-on questions, then do, as I say, Susan will be sending out a copy of the slides from this morning's presentation. So do feel free to respond to that email with any questions that you do have, either on any of the energy bill content that we've gone through this morning, or even on more generally green business fund services. And we'll be very happy to come back to you on those. But I will leave it there. So thank you all for attending the webinar this morning.